Hello, deodorant, and welcome to this Accounting Smart class. My name is Abdul Ghani Fawad Hussain. Brand new video about the basic journal. In this video, we are going to see together the different types of journal in your accounting and deconstruct them in order to give you better insight of how accounting works and just giving you skills possible in order to understand. Just so, let's get started with basic. Entries are divided into journals or books, so that's why we call accounting. Also, bookkeeping because we record accounting entries in those books there. Several kinds of journal entry. In the right journal, the entries are. So, the main journal types are sales for purchases, for vendor bills, payments. Let's start with the customer invoices, a receivable account, and a revenue. Okay, so remember the last video about depending on the type of account we're going to have a specific behavior for. So a receivable account in our case is account. And as I said in the latest, if you want to increase the value of the value on the debit side, so here we record a new invoice, so we debt from our client in our case. We increase the receivable account, and since it's an active account, we book it. The counterpart is going to be an income. And in that case, if we want to increase account, we need to book the amount on. Of course, those entries are booked and this is what it looks like in Odoo. In our case, so we're gonna find again the receivable account with the value on the debit side. And then the income account, which is on the credit. And as you can see, debit equals credit. So we're good to go. And the customer invoice entry is valid. What about credit notes? So for those who, from a customer invoice, so if you made a mistake in the invoice, the amount is not correct. The quantity is not correct. And you need to make some. So you need to deduct some of the amount. From customer invoice into a partial reverse because maybe it was a complete mistake and you need to reverse. Or partially in that case for credit. The entry is exactly the same, but only the opposite. What I mean is that it's going to be the same account. So you're going to have again a receivable. We're going to have, which means since we decrease them, receivable account, because it's a credit. So we decrease the amount of debts that we credit the account. And of course, we decrease the amount of income that we're from this transaction. So in that case, we debit the account. So remember always the